Good afternoon, everybody. Welcome to another episode of Charge Forward with Chargebacks 911. I am your host, Justin Clements. Today, I am joined by Zach Matthews and Tenny Thurman, respectively. They are these are two folks. Tenny is our business development manager at Chargeback 911. Zach Matthews is our fearless sales engineering leader. And these guys are on the front lines with our clients. They are talking to them all the time, figuring out what's going on, what problems they're running into, and not only what's going on with them today, but what's on the horizon in the future, which is exactly what we're going to be diving into this podcast episode. So I couldn't think of two better people to have from our company than Zach and Tenny. So both of you guys, thank you so much for coming on. And Zach, I know you just wrapped up Affiliate Summit West in Vegas. Is that right? How was that event?
It was a fantastic event. As always, it's a lot going on, but that's also Vegas to some extent. So no, it was a wonderful event. Was down there Monday, Tuesday, and then yesterday. Had an opportunity to meet with a lot of our existing and potential clients in that space. So it was a good show.
Yeah, that's awesome. And you live in Vegas, right? You're a local there?
I do. I've lived out here now, 12 years, which if you know anything about Vegas, people, if they make it longer than 2 years, they're usually there a long time. It's kind of a weird place. And when I moved here, I told everybody I was going to be gone in 2 years, and I'm still here.
See, you have to get past that probationary period of 2 years, and then you're in.
100%. But I think it almost takes that long for you to stop living like you're a tourist. And if you don't get past that, then you leave, because it will burn you out. And I think it's the same thing when I tell people I live in Vegas. They're like, people live in Vegas? And I tease them about living down on the Strip. I really don't. The reality of it is when you live here, you don't really partake in the city the way that people experience it when they visit. So if you've come to Vegas and if you've only ever been to the Strip, actually, you've never even been to the city of Las Vegas. People don't realize that. The city of Las Vegas starts north of the stratosphere. It's the city of Las Vegas is where the original Las Vegas Strip was, which is Fremont Street. They moved the Welcome to Las Vegas sign. They moved the airport. They did all of that. So actually, most people have never even experienced what they know as Las Vegas. Living here, I don't go to the Strip. I avoid it like the plague, kind of like people that live in Los Angeles and they never go to Hollywood Boulevard. So it can be a really normal, fun life where you can dip your toe in that when you do it the right way. But yeah, it took me the first 2 years to kind of stop being an idiot and going out all the time. That's ultimately what everybody's challenge is. I was also in my early 20s.
So as like a Vegas local, because I'm always curious, like what does a day in the life of a local Vegas resident look like? Because my only frame of reference is like Ocean's 11 and Casino. Like, so I only have that, either the Hollywood viewpoint or what I hear from people who are going there as a tourist. So please help, do away with my preconceptions of what Vegas is. How's it like on a day-to-day period? You already blew my mind with the fact that the Strip is south of the actual city itself. So I don't know, what is a day-to-day in the life of a Vegas local?
So what I love about Vegas, everything's open all the time. So, right, I work from home. I start really, really early. The gym's always open, groceries are always open. And so a normal day for me, now that I work from home, is work, get off in like 2 or 3 o'clock in the afternoon, because I start my day on East Coast time, and go to the gym, go to grocery shop, right? Stuff like, it's just a normal city. And the weekend is where it gets kind of fun, because on the weekend, you can kind of choose your own adventure. You can look at it and say, hey, is Beyonce performing this week or this weekend? And if it is, and if she is, you can pick up a cheap ticket. Like literally, I love living in Vegas because I never plan my weekends. I see what's going on and I pick up last minute tickets. In the last 2 years, I think I've seen, I won't even tell you who I've seen and what I paid for it, because I'm gonna get some nasty looks from Tenny. But I mean, like, I saw Pink for $64 in the third row, because I just didn't commit to it until the night of. I said, hey, I don't care if I go or not. I bought the ticket, I walked in, and there I am. So it's still a weird city if you choose to do that. But other weekends, I don't leave my house or go to the Strip or anything like that. And it's just a normal city like anywhere else I've ever lived. So I kind of like it because you can choose to go to the adult playground or you can stay in the suburb.
Now, for some people who may or may not be familiar with Chargeback 911, we're headquartered down here in Clearwater, Florida, and I just recently learned that Tenny, you are in the few and the proud group of being somebody who was born and raised in Clearwater. Is that right?
Yeah, a rare Florida Clearwater native. Can't really say that too much anymore. I talk to so many people all the time that live here, and they're like, "Oh no, I'm from Michigan," or "I'm from Canada," and it's just like it's very rare to meet another native. So yes, definitely very proud Clearwater Floridian.
Yeah. Well, I am one of those folks who was part of the I-75 migration, where we just because I'm from Indiana, so I probably 80% of the people I've met down here are from Indiana, Illinois, Ohio. We all just hopped on I-75 and hopped off right here. So I am one of those people from from the Midwest that made the great migration. And I've always been curious, but have yet to ask you, Tenny. But I figured, hey, we're broadcasting to a ton of people right now. This would be the best place to ask. Is Tenny your birth name? Is that a nickname? Is that short for something?
It is my birth name, actually. It is my grandmother's name. So I have a grandma Tenny, and my parents named me after her. So they call her Tenny May because that's her middle name. And then I'm TT because my middle name is Tamika. So it's Tenny May and Tenny Tamika. So I just was dubbed TT, and she's just Grandma Tenny.
Ah, I love that.
We have no idea where it comes from though. Like there's no family history on it. I think I tried to like Google it once, and it's maybe a French derivative, but it's mainly used as a surname. I guess in Europe it also stands for like tennis shoe or like a penny. But yeah, otherwise there's not much else there other than it's my beautiful grandmother's name.
Well, I always thought if you started a podcast on your own, that I thought the title of Two Pennies from Tenny would be awesome, and you just give your 2 cents on everything. I thought that'd be a great one. You keep that one in your back pocket.
All right, I'm noting it down now.
He's gonna come for royalties.
Yeah, just cut me in on the profits from it. There you go.
All right.
But I think the most important question that I have for you guys, leading up to this weekend is Eagles or Chiefs. Super Bowl this weekend. Now, keep in mind, some people are going to be listening to this after the Super Bowl, so a lot of pressure on you. Could be wrong right now. So, Tenny, let's start with you.
You know what? I don't go Taylor Swift's boyfriend. I don't think you can go wrong with that. That's who I'm voting for. That's who I'm rooting for. I have a little friendship bracelet that says "Go Taylor Swift's boyfriend" on it, and that's what I will be wearing Super Bowl Sunday.
Do you think she's going to perform at halftime?
Oh, I would love for her to. I know that in the past she said that she's nowhere near ready to do a Super Bowl halftime show just because she's at the peak of her career. There's really just no point in doing it until like later down the line. But I was hoping that it was going to be like Kendrick Lamar at halftime, and then which actually I'm saying this and I don't know who's performing yet. But I was hoping it was
Kendrick
Lamar. It is really? I swear, if he doesn't take her out for like the Bad Blood collab that they did, I'm gonna be disappointed. My hands are going up in the air, like because they have a song. I forgot collab with her on that song. So that's
he did. I feel silly. I was just telling my friend the other day. They were like, "Is Taylor gonna come out?" I was like, "Well, they don't have a song together." You are right. They totally did Bad Blood together. Yeah.
Yep. So she better. Otherwise, she's letting it like it's gonna be a massive disappointment. I'm only tuning in for the commercials to see Taylor Swift and then to see the halftime show. Hopefully, she'll be there.
Yeah. All right. So you're supporting Taylor Swift and the Kansas City Chiefs. All right. Zach, do you have a preference on who's to win the Super Bowl? Are you a Philly fan, Kansas City, or either one could win?
So my strategy is a little different than Tenny's. I'm not rooting for Taylor Swift's boyfriend, but what I'll say is I don't think there's a bad option for me. So my team is a totally different team, and I think that there are redeeming qualities to both teams winning. If you're asking me who I think is going to win versus who I'm rooting for, that's a little bit of a different answer. Living in Las Vegas, I do have some money down on the Chiefs winning, so I'm hoping that that's the case. But again, it's the odds are actually fairly tight last time I looked at them. So right, like it should be a good game either way. And from a personal perspective, I won't be disappointed if either team wins.
Yeah. Yeah, I feel for the Philly fans, because that's just one of those cities where, like, oh, if they lose the Super Bowl, people are gonna riot. But if they win the Super Bowl, people are gonna riot. So it's like, if you have a car in Philly, maybe drive 20 miles out and Uber back in. There's a good chance that car might be flipped over. Where we're going to be going over fraud and chargeback trends and predictions for 2025, how businesses can leverage emerging tech and payment methods, and how retailers can best protect themselves against chargebacks. Now, before I get started, I just want to quickly go over how this webinar is going to be structured. First part of the webinar will include a short presentation. This portion will have some visual elements, so it's important that, if at all possible, you close any other windows that you have and give us your undivided attention. The second portion of the webinar will be a Q&A, where we answer many of the questions that were submitted beforehand. Now, this portion will be a little less visual, so it's okay if you just want to listen in on that part. During the webinar, though, feel free to submit any questions that you have, and we promise that if we can't get to them live, we will follow up via email with you after the webinar and get those questions answered. Also, we'll have a version of this webinar on our podcast. That's ChargeForward with Chargebacks 911. Now, the podcast version will have a little bit more info to it. We'll tackle some more submitted questions. I'll tell you all about how to find those podcast episodes at the end of our webinar. But the webinar will be available for replay starting tomorrow. Now, none of the Q&A portion will be included in that recording, however, so we encourage you to stay with us today so you get the maximum value out of this webinar. So make sure you stick around for those questions. So for this webinar today, we talk about 2025 trends and predictions, but what we're really going to go into is some major regulatory changes that we're going to be seeing coming up in 2025, and actually one that's just implemented a few weeks ago. So if you're a subscription-based merchant, definitely want to listen up for that part. We're also going to talk about advancements in AI, evolving fraud tactics, biometrics within payments, how consumers are preferring to shop and what experiences that they're looking for, and the latest in fraud prevention strategies. So, we're going to be diving into each of these topics, so we'll get right into the first one, and that is the FTC's new click to cancel rule. We saw some pre-submitted questions earlier about this one, so you'll be happy to know that we're going to be jumping right into it. So the FTC's new rule requirement, it requires subscription-based businesses to make cancellation just as easy as it was to sign up for the subscription. So the new click to cancel rule, it went into effect on January 14th. It's something that we've already seen happen in Europe under their consumer rights directive. We even see Germany has their own version where they require merchants to make all subscriptions cancelable with only 2 clicks. So this is something that the US has taken note of and has implemented a new rule change for that. Now, I want to get into kind of the specifics of what it means, and then we can kind of widen out the scope and talk about the pros and cons. But Tenny, would you mind running us through, what these requirements look like and sort of the intricacies of them?
Yeah, definitely. So as you said, overall, it's just a matter of making sure that consumers can cancel their subscription just as easily as they signed up for them. One of the key components of the click to cancel rule is prohibiting misrepresentation. So just making sure that your consumers know exactly what they're signing up for, that they are signing up for a subscription-based model, and just making that clear. Now, that also kind of falls into making sure that they know that they will receive recurring billing, and the date of that recurring billing, the deadline to stop their services, so making sure that they know when they need to cancel by in order to prevent a recurring cycle, the dollar range cost for the services. So a lot of merchants may have consumers sign up with a discounted rate to onboard initially or enroll initially, but then maybe the price changes the next few cycles. So just making sure that if you are offering discounts on that first subscription, that is clear, and then the ongoing cost is present as well, and then information on how the consumer needs to cancel. Now, also obtaining consent. So the consent for subscription needs to be unique. It cannot be within the existing terms and conditions of your services. So making sure that there is a separate disclosure at the checkout process for consumers to know that they are accepting a recurring subscription model when they are purchasing. Now, that needs to either be maintained for 3 years, so merchant needs to keep that on file for 3 years if you're opting to not do a click to accept box. Now, as far as the cancellation mechanism goes, again, just needs to be as easy as it was to sign up. So if you are having merchant or consumer sign up online, making sure that they can easily find that information in their account settings or wherever you want to place that, if it's in an app or online strictly. Now, for example, if a consumer has to call you in order to sign up for the subscription, they can call you to cancel as well. So it just needs to match the method in which they signed up for the services.
Yeah, and for those who have been sort of following along with this rule change, early last year they came out with a proposal for this rule change. Now, most of everything from that proposal has been worked into the official rule change, except for 2 things of note that I kind of wanted to bring up for everybody. So annual reminders for non-physical subscriptions, meaning any subscription that you have that's for a software or anything that doesn't lead to a physical good being shipped to you. The annual reminders for having to tell people when that subscription is set to renew, that's currently under review. So it's not in the official rule change, although it could be added at a later time. And then the second major thing was they have removed the requirement for consent before trying to retain a customer. So if you have a customer who's looking to cancel a subscription, in the rule proposal, they would require that the consumer give you consent to be able to reach out with promotional offers or anything to try to save that consumer from canceling that subscription. Now you can do that during the cancellation process without having that consent. Again, something that they might change at a later date, but for right now, that is currently not in the rule change. So just kind of widening out the scope. Tenny, can you kind of give me, sort of the benefits of what's going on, the pros and cons of essentially what this means for merchants?
Yeah, so I would say the pros are definitely outweighing the cons on this one, starting with reduced chargeback rates. So when consumers have an easier time canceling the subscription service, they're going to come to the merchant first in order to cancel rather than going directly to their bank. So that's definitely going to lead to fewer chargeback rates because it's going to be easier for them to locate the cancellation terms and be able to just stop the subscription.
So going into our final topic, and this is something that we can speak at length about, but something that will boil down to a few key points, and that's chargeback fraud trends that we're expecting to see in 2025. So, Zach and Tenny, I'll let you guys dive deep into this one, but tell us a little bit about what's to be expected this year in terms of chargeback fraud.
Yeah, I know when we were looking at these stats, Justin, I was super surprised by the Cyber Monday surpassing Black Friday in sales last year.
Yeah, for sure.
But then taking into consideration that Black Friday is starting much earlier in the month now than just that Thanksgiving weekend or that Friday after Thanksgiving, it's now we'll start the deals earlier in the month. I think honestly, COVID just has shifted a lot of the social construct around online shopping and delivery. People just don't want to physically be in those kinds of crowds. So that was definitely, I think, the most interesting stat that we found on that. But with that being said, with increased e-commerce transactions, that comes with increased growth in fraud and chargebacks. So merchants definitely need to be aware of that. They need to be able to look out for that. They need to look at implementing the prevention and tools in place and this is affecting every vertical. This isn't specific to a certain vertical, just overall e-commerce transactions are growing year over year. But I will say that with friendly fraud, we are seeing a massive increase in friendly fraud specifically when it comes to comparing it to true fraud. First-party misuse is something that merchants are definitely struggling with. That's why I find the biometrics and the adoption of biometrics so interesting, is that looking to see the trends and how biometrics mitigates the instances of first-party abuse, because you have more compelling evidence to say, no, this was the actual consumer that made this purchase. So I would definitely say this all leads into kind of the highlights that we'll throw in at the end there, but just making sure that your policies are disclosed, making sure that you're capturing the right data at the time of authorization, especially in card not present transactions. And that's kind of my hot take on these topics. I know that I'll kind of dig in a little bit more soon.
Mhm.
I don't really have a whole lot to add. I think the biggest thing that I would say is in 2023, 22% of all retail sales in the US were online, right? That tells you something about the ability to transact in something that's not credit card or a digital payment, right? And that's ultimately, that exchange by itself will contribute to an increase in chargebacks. Less cash, more ability for it. And I think then the other factor that I would call in here is right, you had COVID, a bunch of that stuff, and you've continued to see consumers be more comfortable and aware of chargebacks. I think that now that COVID's behind us, right, it's still continuing. It hasn't changed, right? Consumer behavior is continuing to move toward that. And things like Cyber Monday overtaking Black Friday and things of that nature are just going to continue to push in that direction.
Mm-hmm. Yeah, and a couple specific trends that we're also seeing as well is the increased sophistication of friendly fraud, right? So we're seeing a lot of these card holders being able to, if they're vague with their reasons for why they're submitting a dispute, they have a better chance of success. We know that for some of the networks that there's kind of these blanket reason codes for if a reason for a dispute is ambiguous enough, it sort of falls under a general reason code. And we see that whether it's through outright malicious fraud, that for them being if they can be as vague as possible but still fit the criteria of a given reason code, that the likelihood they're going to have that chargeback and see that that instantaneous refund. Kind of going back to how we're talking about AI being used by fraudsters, we're definitely going to see more fake identities, using AI tools with, like deep fakes, text generation, and image manipulation. Those are being used to file fraudulent chargebacks as well. So being able to, use AI to manipulate a receipt or a photo, any of those things that can be used as evidence to by somebody committing chargeback fraud, it's gonna give them a little bit more leverage. Not that they needed much to file a chargeback in the first place, anyways, but being able to submit that falsified evidence, that's something that we need to be on the lookout for, just as an industry as a whole. Another thing that really hits close to home is how refund service scams are contacting consumers. So what a refund service scam is when you have a scammer who will reach out to a customer, offer to file a fraudulent chargeback for them. They'll make it seem like it is a legitimate chargeback to the person that they're reaching out to, but they offer to file a fraudulent chargeback on their behalf for a fee, essentially acting as a refund service. The reason why I say this hits so close to home is because we had, I'd say about 50 people contact us saying that somebody from Chargebacks 911, I'll put that in air quotes because it was not us, reach out to them offering to file a chargeback on their behalf. And anybody who knows us or who is familiar with us knows that we work with card networks, with financial institutions, with merchants. We do not file chargebacks on behalf of consumers. So that was something that we had to, put a public announcement out there and say, hey, if you're a consumer and somebody is reaching out saying that they're from our company, saying that they'll help you file a chargeback, that is not us. That is a scammer. They're looking to get money from you, and they're looking to game the chargeback system and take money from a merchant. So also something to be on the lookout for. That happened to us in Q3 of last year, where we just got a flood of calls in asking if we had reached out to them. The last thing is we're going to see, obviously with new technology, new payment methods that come into play, we're going to see some vulnerabilities, as with any novel technology. So we're going to see some exploitation of these new payment methods. We've seen this take place with buy now, pay later, where these folks will either buy something, make an initial payment to get the product, and then file a chargeback. All that goes onto whoever facilitated that buy now, pay later payment. So just being on the lookout, if you are adopting a new payment technology, make sure you research the vulnerabilities and make sure you have placeholders in set to help protect you from that. But as always,
to buy
yeah,
now,
go ahead.
That's a great example, right? Like making sure that you understand the process if there is a chargeback and stuff like that filed. A lot of these alternative payment methods have totally different process around them, and a lot of times merchants don't think about it until they're behind a lot of chargebacks. Sorry, Justin, go ahead.
No, you're fine. That's a great point. And then last but not least, obviously, love to give you guys some chargeback prevention and management tips. Zach and Tenny, I'll let you dive into this a little bit. This is our typical message that, you know, if you've kept up the speed with us in our articles and other webinars, you know, you've heard us give this advice before. But Tenny, Zach, I'll let you dive in and cover a little bit of some of these points.
Yeah, I think a lot of these are self-explanatory in that way, so I'm not going to bore you guys with all of the details, but just to kind of hit them at a high level, using fraud prevention tools. So making sure that if you are offering biometrics that you're capturing them, ABS, CVV verification, 3D secure, two-factor. So if you can offer any of these or make sure that you're securing at minimum ABS and CVV data, that's definitely going to be beneficial in preventing fraud, but then also it's considered compelling evidence when responding to fraud chargebacks. Implementing clear policies, so making sure that your policies on refunds, cancellation, the terms and conditions, all of that stuff is properly disclosed at your checkout process. You want to make sure, and now mind you, all of this stuff is best practices with the card scheme. So when you show the card schemes that you are utilizing these tools and you're making these efforts, then it's going to only look better for you when you are fighting your chargebacks. Order fulfillment is definitely a big one. I would say that, especially in Q4 for a lot of merchants, sometimes there may be shipping delays. I would say make sure that you're setting proper expectations with your customers. If your normal turnaround time is 3 to 5 days, but then during Q4 it's 7 to 10, let them know. If there's an unexpected delay with the customer's order, reach out to them, give them that customer service aspect of keeping in touch with them, letting them know what's going on with their order. And you're going to definitely mitigate these instances operationally. Billing descriptors, I know you touched on that earlier, Justin. That's definitely a big one, making sure that your billing descriptors are up to date with your most recent customer service numbers. If you have dynamic descriptors, just make sure that the product description is accurate. You want your customers to be able to identify where the purchase is coming from, so that way it's not hard to figure out later. Making sure that you're keeping the detailed records of the transactions and chargebacks. Alert services. So consider prevention. You get those advanced warnings of potential disputes so that you can resolve them with your customer before they turn into a chargeback and negatively impact your merchant accounts. You avoid those chargeback fees with your processor. Using analytics. So don't just sit there and get the disputes and respond to them. Try to understand them. Understand what kinds of disputes your customers are filing. Understand what operationally could be causing them, and look at the analytics to help you make changes operationally to just kind of improve these stats over time. Making sure that when you are responding to your chargebacks that you're doing so in a timely manner. And then again, just staying up to date on best practices. There's always so much changing within the payment space. Making sure that overall you're aware of the bigger changes like the FTC click to cancel rule that's affecting merchants right now. And just staying on top of that stuff and making sure that you can prove that you're staying in line with best practices.
Mm-hmm. So my add-in, it's not choose 3 from the list. It's not even choose 6 from the list. It's all or nothing. I talk to our customers about a chargeback mitigation strategy. And it doesn't matter if you work with a partner or you want to manage it internally. It still requires paying attention to all of these areas, because chargebacks can arise from merchant error, first-party or third-party abuse. There's all different things, and each of these areas are aimed at tailoring and addressing part of the equation. But also, it's not just
real quick. We'll get to a few of these, as many as we can. Yeah, again, if you have any questions about anything that we covered, feel free to submit them, and we can get to you afterward. We'll follow up via email. But I'll take us to the first question that we received, which is, how can I effectively dispute chargebacks when the acquirer does not support compelling evidence 3.0 from Visa? I'll let either of you guys jump on that one.
I mean, my first thought is document everything. Maintain detailed records of your transactions, customer contact details, IP address, device ID if you can store it, purchase receipt, tracking numbers, proof of deliveries. Make sure that information is available and included in the representment process. So even if the acquirer doesn't participate in CE 3.0 directly, those items are still considered compelling evidence and can be used through the representment process.
Yep. So that's the exact point I was going to make. An acquirer not supporting compelling evidence means that they don't offer the service. It doesn't mean that they don't have to adhere to the compelling evidence guidelines that Visa, MasterCard, and the networks provide, right? So what Tenny said is completely correct. Even if they don't have the service where you can send it in at the time and deflect the chargeback, all of that same evidence is exactly what you would use to fight it after it comes through. And so the solution is the same: storing and keeping all of the evidence that you would use if that service was there, and then just deploying it in a different way.
Mm-hmm. That's great. All right, next question we have is, how do I tell when a transaction is verified by Visa, and how can I fight that? How can I tell when the transaction is verified by Visa, and how can I fight?
I think that this is if it's a 3D secure transaction is the way that I'm doing that. So verified by Visa is usually indicative of a 3D secure transaction. And here's the thing, that would mean through implication that it's not a fraud chargeback. That would mean that the customer is saying, I was involved in the chargeback, but something about the service I received is an issue. And so 3D secure doesn't stop a cardholder from raising a chargeback in its entirety. It stops them from alleging fraud. Right, what it is it's saying, I know that Zach was involved in this transaction, so Zach can't say that he wasn't. But that would mean that the chargeback reason code that you would be getting would be indicative of some other problem. And so you'd fight that based on what that reason code is. And ideally, you'd try to solve the underlying operational problem that created the chargeback, because almost all of those ones, if they're real, right, if it's not just someone being upset about something to be upset about it, go back to a process or a disclosure issue that you can address.
I would say too that just to be clear, you still can get fraud chargebacks on 3DS secured or on 3D secured transactions, but this is a good opportunity to look at the descriptors, right? Make sure that it's not because the consumer just didn't recognize the transaction because the billing descriptor didn't provide enough information. So it could just be a matter of, I don't remember what this was. And so sometimes that's a good point to just kind of look at those as well.
To that point though, too, pointing out that it was 3D secure, right? Like, we know that this cardholder was involved. Is it possible? And approaching it from a user error despite the reason code is also another very common way, right? Because the 3D secured actually works in your favor as a merchant, right? You want it to show as a Visa 3D secured transaction if they're alleging fraud, because that's the first piece in saying, well, hey, I did everything I was supposed to at the point of transaction to determine and ensure that you were involved. So are you sure you weren't?
Yeah.
Yeah, and a real quick stat that we have from our cardholder dispute index that kind of goes into Tenny's point about billing descriptors. When we asked cardholders what their reason was for filing their chargeback within the last 12 months, the leading cause was didn't recognize the billing descriptor. That's not saying that the fraud was the transaction was fraudulent or anything like that. It's just that they didn't recognize the teller. So, and that's something as simple as reaching out to your merchant account rep and finding out how what that description looks like and how you can change it. So. So I know we're 1 minute past the top of the hour, but we're going to go ahead and take one more question for those that are still on board with us. So last question of this webinar is, how can merchants defend against fraudulent chargebacks with Apple Pay and Google Wallet?
I'm taking that one, Tenny.
At
a high level, the wallet is the problem. The wallet protects the consumer and wraps it in things like biometrics. We talked about that, right? So a really great way that biometrics is actually really influencing stuff is anybody with an iPhone, if they're not unlocking it with a passcode, if they're using their fingerprint or their face, that's a biometrically secured payment when they use Apple Pay. And so ultimately there's benefits to it, right? But the challenge is that Apple Pay doesn't give you the real card number. They give you a token. And so when the cardholder calls their bank, they're raising it against their card. The issuing bank doesn't have the token. The problem isn't actually that you would fight this any differently. It's that there's a challenge tying the data together. It can be done, but it requires storing other data elements and really making sure that you're optimized for that. But then ultimately, we work with lots of merchants. I personally work with several very large merchants that came to us with what they thought was an Apple Wallet problem, right? And actually, it was getting the data and tying it out. It's actually much easier to overturn certain types of chargebacks that are processed in an Apple or Google Wallet if you can tie the data together. So short answer, it's less about how you fight them and more about just being able to tie the Apple transaction to the incoming chargeback.
Okay, so the next question that we have is, how can financial institutions and companies work together to fight fraud trends? Who wants to tackle that one?
I would say first thing that comes to mind is collaboration. Like maybe some space of shared technologies. That may be more your wheelhouse, Zach, but I'm just thinking of like more general databases of customer behavior trends or like data, detection tools, kind of integrating in a way that the acquirer is using the same technologies as the merchant in that way. At least that's what comes to mind. The technical side isn't really my forte. So I don't know if Zach has any other comments on that, but that's what comes to mind for me.
Yeah, so just to make sure that I heard it right, it's merchants and banking institutions, right? Like they're acquired.
Yeah, financial institutions and companies. How can they work together to fight fraud trends?
So I'm actually going to call out to this foundational story of our company, right? So acquirers take interest in this stuff. I think it requires you to take interest back. So Chargebacks 911 was founded because Monica Eaton had an e-commerce company and she started fighting her chargebacks. And it was actually her acquirer that reached out to her and asked if she would talk to another customer about what she was doing. So what I would say is that there are forums for this. I think you have to show interest and remark that. Like also working with merchants, right? Your acquirer takes an interest in this stuff, right? Your risk mitigation strategy. And so I think it's as simple as starting a conversation, right? And I'll also say, we partner with acquirers like WorldPay publicly on this front because they are interested in it and want to extend better service offerings to their customers. Customers meaning their merchant customers, right? Because at the end of the day, it's a problem that impacts everybody, and the smart acquirers are working together on it. So I think it's as easy as having a conversation and talking to your specific rep at your acquirer, because oftentimes those programs do exist. They're just not always proactively talked about. If you're looking for more specific ways, right, I think communication is really a big part of it. Having that conversation with your account rep, you can communicate what trends you're seeing, you can ask about the stuff that you're seeing, and they will come back with feedback. Ultimately, it goes back to a comment that I made around the idea of the consortium of data. Your data points are here. If you talk to your acquirer, you get more data points. You go further up and you get a broader perspective. And so it's really valuable for both people because the acquirer's perspective is informed from the composite of their customers. And then you as a customer can gain value from having that same conversation because it trickles back down to you.
Now for, I know a lot of this, like collaborating, a lot of that involves like working off the same data sets. Is that something that, like regulatory bodies are going to have to push for in order for us to do that? Or is that something where we're going to have to come together on our own and share sort of that data so that way everybody in payments benefits? What's I don't know, what do you guys think is going to be the route to get us into that sort of collaborative routine?
I think from a regulatory perspective, I am skeptical that in the next or in the foreseeable future that's going to be forced on anyone. I think if I look at the regulation, it's going the opposite, right? People are being empowered to keep their data. They're not being forced to share stuff. But I think the opposite is also true. And what's cool about chargebacks don't have any intrinsic PII related to them on the incoming chargeback. Nothing about the cardholder is there, right? They give you information that you as the merchant should be able to like look that up, but like the name of the person isn't what's being analyzed, right? There isn't a chargeback trend that Zach Matthews opened 50 chargebacks. The chargeback trend is your volume and reason codes and things that are really, really easy to anonymize. You can remove any of the identifiable data from it and share a scrubbed data set, so that essentially what you're participating in is called informatics, right? You're taking data and turning it into a metric and then sharing it with other people in a way that it can be benefited from. And I think that that's something that that requires people to get involved and do it. But again, not a shameless plug, but a great example of where that works today is right, Chargebacks 911 uses that very process to learn more and share in a safe and responsible way what we know about our other customers, right? So I don't have to tell you anything about the business that the e-com person is running, but if you're in e-com, I can tell you something about what we've seen in the industry, because that's data that we track, tabulate, and anonymize in a way that can be shared without, again, giving away anything that we're not supposed to.
Gotcha. That makes sense. I like that take. All right, so let's all come together on our own. Let's not wait for regulators to force that on us.
Waiting for the regulators is usually a great way for it to be 20 years too late.
Okay, let's see. The next question that we have: how can I detect chargebacks before they happen? That's a pretty easy one. I'll let you guys dive into that.
Teddy, that one's yours.
Oh, thanks. I would say classic fraud tools. I would say, fraud detection.
Oh, hold on, pause. We're gonna recut this one. The answer is alerts.
Huh?
It's all the deflection products that we offer, right? So before the chargeback is actually raised, right? Like that's how you prevent. So I'm gonna shut up. Like I don't want to answer this one. I mean, like I really mean it. It's an easy, clean answer that's a plug for us as an organization.
Yeah, I was gonna say. So I kind of took it as tools that people can use, but also like other things like velocity checks, for example. You know what I mean? Like you can kind of detect patterns at the checkout process to kind of see, okay, is this like a little bit more high risk, and kind of stop it in its tracks before it actually becomes an authorized transaction and then a dispute. So yes, definitely, I would say you have fraud filters, so you can put filters in place to kind of detect transactions before they're authorized. You can also look at your velocity measures, so you can take a look and see how many times is this transaction trying to go through, or how many transactions is this customer making back to back to back to back, and that's usually a higher indication of fraud. I would also say there are tools for post-transaction or post-authorization. You can put alert services in place. We offer all of the alert services on the market. We also have our own proprietary services for certain card schemes as well. But working with Ethica, with Verify, RDR, which is the Rapid Dispute Resolution tool by Visa, Order Insights, Compelling Evidence 3.0. These are all alert tools that help a merchant mitigate a dispute before it turns into a chargeback. So it kind of works at the prevention level to where you have the opportunity to work with that customer, potentially issue a refund if needed, before that continues through the chargeback process and is filed as an official chargeback. And those are tools, as I said, that we all offer, and we work on with merchants to determine a strategized solution on what tools they need depending on their situation.
I have a little bit of an add-in. I'm also noticing and starting to see fraud filters that are employing customer behavioralistic analysis to try to determine if a chargeback will be filed. And right, so it's not even, and I don't mean fraud, I mean first-party fraud. So there are also things that are starting to be looked at, right, with like, as an example, rebilling and stuff like that. Rather than just rebilling someone, there are now technologies and tools out there that can actually give you a score on whether or not the likelihood of a chargeback being raised on that rebuild. So, right, I think that technology is advancing, but the classic answers ultimately go back to what Tenny's outlined.
Yeah, and I also want to give a warning too, when using fraud tools or fraud filters, make sure that you're not being too stringent. Make sure that your technology is not learning so much that you're actually coming up with false positives, and then you're actually losing out on legitimate revenue because you're trying to prevent the illegitimate revenue. So I would say that that's just something that we've seen over time. I know I've experienced it with merchants before. You definitely don't want to risk a revenue decrease just to prevent, I don't know, the ratio is just not there. So just be mindful of, making sure that you're not flagging real legitimate transactions.
Agreed.
Yeah, that's a great point. All right, our next question says, with 3D Secure around, what impact does it have on AI fraud tools?
I'm not really sure the intention of that question, to be honest. So I can try to hazard an answer, but Justin, this might be one that we want to reach out to the person and ask them for a clarification versus having this be something that we put in an actual video bite. Because I'm directly like 3D Secure AI tools at what level? Like, are we talking a fraud filter? Are we like, what are we doing with the AI? Like, I can think of a lot of different angles to take this, man, and I don't want to give a 5-minute answer that may completely miss what they're even asking. So just being upfront with you, right? Like, if you want me to take a swing at it, I will. But this might be one where it's like, hey, who submitted this, and we ask them what they meant.
Yeah, that's what I'd say. Yeah, if you want, go ahead and take a stab at it, because even if even if we somehow don't answer his question, we might give somebody out there some information that they didn't know about. So yeah, I just say take your best crack at it.
Okay. So I mean, potential ways that I could see 3DS being rolled out that might affect artificial intelligence. Right. So some fraud tools and things like that are. Well, so as an example, a great way that you may mess up artificial intelligence is if you're not analyzing the acceptance method for a transaction. So, right, like we talked about, 3D Secure is supposed to prevent fraud. That's the whole point of it. And so if you're not looking at what the entry method was for a particular transaction, you could come up with, like, 3D Secure could actually lead you in the wrong conclusion on a model. Right, so example being, if I'm looking at my fraud rates and things like that, and I'm building a model to be able to analyze, right, and fraud score, and you're not accounting for this transaction was secured this way, this transaction was secured this way, and looking at the outcomes, it would actually create false positives in many ways, because as an example, 3D Secure is not supposed to be able to be leveled as a fraud charge. And so if you don't have that variable in there, it would lead the model to think that could be for a different reason. It could attribute that to something else about the transaction rather than the entry method. That's probably the best one that I can think of. Otherwise, I mean, a lot of times we've seen, right, like when people use artificial intelligence to analyze customer behavior on like funnel fallout and stuff like that, I think 3DS can provide a little bit of noise there, because as an example, 3DS is considered ubiquitous and the standard in the not in the United States, in Europe, and in the United States, it's not really gotten a lot of adoption because of customer friction. And so again, without acknowledging the like nuances around 3DS, you could get into some trouble with some bad conclusions around what's driving what from a behavior perspective. In general, my opinion, right, 3DS is pretty ubiquitous in Europe. It's very, very common and friendly found item in Southeast Asia, and in the United States, we just drag our feet as much as we can about it. And so, right, like I think ultimately you'd have to make sure that if you're doing analysis, that you're doing it at a level that groups for those differences rather than trying to build one across. So, right, if you were trying to build a model that looked globally and didn't segment for those, I think that could also run into some issues from a behavioralistic perspective.
Gotcha.
Now, just because, Zach, I don't know much about AI and like the self-learning and that kind of stuff. That's definitely more your wheelhouse. But when it comes to merchants that are currently accepting like 3DS, for example, could that aid in teaching the technology to kind of limit false positives, or what is your take on that part of it?
So I think it's more the introduction of 3DS, right? Because 3DS is unique from a security and as perspective in card not present. It makes it kind of like you swipe the EMV chip, right? Like it's as rock solid with that. And so if you have an existing model that's analyzing fraud rates that doesn't look at the acceptance method and you roll that out, you'd have a complete change in behavior for a variable that you're not analyzing. And that's the biggest thing, right? If you're trying to understand what drives fraud and you're not looking at that, that's considered to be the lock and key in terms of like preventing fraud. And so those would be things that you would either you'd either have to exclude those records from the model completely or have the model address that variable as an indicator. Like I said, man, dry answer.
No, you're good. You're good. Okay, our final question that we have, we had somebody reach out and ask, what are some ways that merchants can protect themselves from return fraud?
Return fraud.
Yeah, so return fraud, I believe return fraud is defined as they returned it, got their money back, and then filed a chargeback. So, right, Tenny, I'll let you go first on this. I think you had an answer that you were queuing up on.
Yeah, I mean, I've had clients that I've worked with where they've dealt with the return label being returned back to the warehouse, but then a completely different product or an empty box is shipped back rather than the actual product. So then the tracking number shows that the item was returned back to the merchant, but then the merchant didn't actually recover the merchandise in order to process the return internally. So you definitely deal with like those fraudulent return scams and stuff. I would say, I mean, for me, when it comes to mitigating those things operationally, it's just making sure that your policies are clear, making sure that customers know what the return process is, how much time they have to file those returns and return the merchandise, setting the expectations for how long it would take to process the refund once the item has been returned. And then also making sure that you're covered to say that we can deny your return and the merchandise will be shipped back to you. Now, even with that being said, I've had clients where the return is not accepted because maybe there's proof of wear or tear, so they can't accept the item back. They can't give the customer the refund, so they send it back, but then the customer denies the re-delivery. And so technically the customer never received the merchandise back, and they can file a claim as such that I've never received the merchandise. So it definitely depends. It depends on the code, the kind of code that the chargeback's filed under, determines the kind of evidence that you need to provide and make sure that you have. But I would say for me, it's just making sure that your policies are in place and they're disclosed properly, and that you have workflows internally that are clear, and that you're meeting SLAs and lead times on and adhering to the policies that you've disclosed.
Wow, I never thought of that aspect because I think they refer to it as wardrobing, right? Where you buy an article of clothing, wear it, and then return it. I never thought about them returning it and say the merchant does their due diligence, saw that it has wear and tear, tries to send it back, and then the customer or the fraudster in this instance claims that they never received it. I never thought about that on the tail end after it's sent back. That's interesting.
I think the only other thing that I would add to that is it's all about collection and curation of evidence. Being able to tell the story and unwind it is what allows you to win the chargeback. And ultimately what fraudsters are preying on is that the burden of evidence is on the merchant. They can call up and they can say whatever they want and they don't have to submit proof. You have to prove that what they said is incorrect.
Yeah.
And so in these situations, keeping all the evidence, tracking customer service notes, having clearly defined policies that are documented and shown.
That's another big issue.
That stuff goes a long way.
Yeah, that is another big issue is customer service. Make sure that your customer service team is properly documenting the phone calls and the emails that they're having with the customer within your CRM, so that evidence can be used in your dispute later. Because it's one thing to have the phone call, but if you didn't take the notes right after the call and they're not stored anywhere, then it just becomes a he said, she said, and that's not going to help you later. So I would say definitely proper documentation. That was a really good point, Zach.
Absolutely.
Yeah, and kind of going back to our point that we talked about earlier in the podcast, about AI being used to create fake documents. Some of those are being fake receipts. So, if that comes in, make sure to compare that against the receipt that you have, because something might have been altered on that, and that can also be submitted and used to stop that chargeback from happening, or maybe even reverse it in the representment process. So yeah, that's a very good point.
One quick note, since you brought that into evidence, there's an art to how you save the original receipt and the transmission of the original receipt that can be used to overturn those fake documents too.
Mm-hmm.
And so, right, again, curating and keeping that evidence, not just the, hey, this is what we sent them, but hey, this is the email where we sent it, and it's in the email, is a much clearer, right? Then that's not a he said, she said. It's, well, I don't know where they got this receipt from, but this is the one we mailed to them. And by the way, this is, right, like this is the order email. And so, right, like it's those pieces as well. But to your point, yeah, don't just take the document at its word anymore. You gotta match it up.
Yeah.
Mm-hmm.
And honestly, I've had clients that take pictures of the shipping labels before they go out too, and it has the weight on it. So if you shipped it out one weight and it comes back a completely different weight, then that can help you show they actually didn't return the merchandise, or they returned me a pair of socks when I sent them, a pair of shoes that should have weighed about 2 pounds. So there's definitely things that you can put in place to document properly.
Definitely.
Yeah, that's interesting to think about too. That's a piece of evidence that I wouldn't have thought of either, getting that package that's sent back. And unfortunately, you have to do that these days. All right, well, that'll wrap it up for this episode of Charge Forward with Chargebacks 911. And as always, thank you so much for joining us. You can find more information on our 2025 trends and predictions, other useful information. We've got articles, we've got past webinars, anything that you can think of. Just go to our website, find the search bar, type it in, but make sure you go to www.chargebacks911.com. Be sure to check out some of our other episodes for topics that we might have covered around retail, payments, chargebacks, and all things related. But thank you very much for joining us. Be sure to stay tuned for our next episode. And until then, you guys have a great and productive day. And please feel free to reach out if you guys need anything or have any questions. So thank you very much, and that'll do it for today. Take care.